can you tell me, first of all, what was it like when you saw the Turkish lira jump to 6.3 on the trading desk? And was there any indication of what pushed it there?
Well, first of all, I thought that we achieved our 2019 target a year earlier, because we were looking for the lira to go up to 6.10 next year and then advance towards 7 the year after. Obviously, it was a shocker because the move has been dramatic, the intraday move well in excess of 10%. But other than for the initial shock, I'm not really surprised to see this reaction becoming worse and worse, because we're getting into a full-fledged currency crisis here. Traders I work with were also quite surprised, but we're taking it very pragmatically. We know that these things happen. It seems like the Turkish authorities are ignoring the risks of neglecting the problems for too long.
Is that the driver? Is it the main driver? I mean, we were all in our news meeting yesterday trying to go through the possible scenarios by which Turkey would put an end to this slump, and you didn't see anything really happen. None of the institutions that could do anything about it seem prepared to do anything about it.
Well, I think there's no political willingness to do what's necessary. The central bank has its hands tied. They probably haven't got the green light from the government yet to do an aggressive hike. When I say aggressive, I mean a multiple of a percentage point just to stabilize the lira. All the market is talking about now is Al-Bayrak's new economic program that will be officially presented today and that was flashed out yesterday and in the previous days. But I think the problem here is not something that you fix within an economic program. You need very aggressive and prompt monetary policy measures, and that's the central bank that should be working on. But as I said, I don't think they got the green light.
How much of a hike, Cristian? I mean, what kind of hike would you need to see from the Central Bank of the Republic of Turkey before you would feel comfortable going in and helping to stabilize the currency?
I think I would be quite happy to see the repo rate, that is the benchmark rate, moving up to say 30% from about 17 3/4. That's a dramatic jump up. But if you look at where the market is positioned, 1 year cross-currency swaps are at above 24%. 1 year bonds are in excess of 20%. The local rates market is broken, so it's not even possible to say how accurate these levels are, but you need to shock the market, you need to short-circuit it, and you need to go way above where the market is reasonably positioned at the moment.